Good morning. Thank you for joining today's Q&A session as well as webinar. We're going to go over some good topics today, and then we'll answer questions here on the live chat. As always, today's session is for informational purposes. We are not providing investment advice or legal advice. You can also follow the conversation on our community site, where we have over 30,000 members, an entire video catalog, many guest posts out there from professionals in the industry, as well as lots of forum posts. The address for that is mysolo401k.net /my community. So that's the address for our community. We're going to go over the Roth Solo 401k today. We're going to talk about cryptocurrency. We're also going to talk about Roth Solo 401k distribution rules. I know we're getting some of those questions more and more now as our clients age, getting up there in age. So we're trying to do some planning and determine whether or not they should take a distribution from the Roth Solo 401k, and if so, what those rules are. We're also going to talk about the auto contribution credit, $1,500 auto contribution credit that's available for new clients as well as existing clients. If you're an existing client, the auto contribution feature may need to be added to your plan if you open the Solo 401k plan with us prior to December of 2023. All right. And a solo 401k for my solo 401k financial is often referred to as a self-directed solo 401k with checking control, because you can also invest in alternative investments by using a check. So if you want to invest in real estate, you would write a check. Alternatively, that type of investment can also be done by wire. Lastly, the solo 401k that we offer also allows for investing in equities. As a result, you'll be able to invest in both equities and alternative investments. Of course, you're not required to invest in alternative investments, but that doesn't mean you don't lose that feature to do it down the road. Similar with equities, you're not required to invest in equities, but you know that the plan out there offered by a company like my Solo 401k Financial allows you to diversify into both traditional investments and alternative investments, such as real estate and cryptocurrency, to name a few. Also, the Solo 401k offered by my Solo 401k Financial allows for participant loans, where you as the participant can borrow from the Solo 401k plan up to the limits, which is 50% of your total balance, not to exceed $50,000. Of course, you also have to be eligible in order to open a Solo 401k plan. So as long as you don't employ any non-owner full-time W-2 employees who work 1,000 hours or more, then you would qualify for a Solo 401k plan. Your spouse can also participate in the plan, provided your spouse is working in the business. In many instances, we end up setting up a Solo 401k plan for both spouses, and either one spouse participates or both participate in the plan. Now let's switch gears to cryptocurrency. So a Solo 401k offered by my Solo 401k Financial allows for cryptocurrency investing. Of course, there are several steps that need to be taken in order to invest in cryptocurrency. The first step is the obvious, which means you have to qualify for a Solo 401k. Those eligibility requirements that we just went over. And then once you determine you're eligible, You can open a solo 401k plan with a company like my solo 401k financial, where you would complete our online application. And that's how we collect the necessary information to draft the plan documents. Also, the third step in the cryptocurrency investing process through a self-directed solo 401k plan entails opening up a bank account for the solo 401k. So it's opened up in the name of the solo 401k plan using the plan's specific employer identification number. And then step four is you fund that solo 401k. You can either fund it by making an annual contribution and or by transferring IRAs or former employer plans to the plan, or if you are restating an existing solo 401k plan from a provider such as Fidelity or Schwab, that's another way to fund it, where we restate that plan over to our self-directed solo 401k, which will allow you to invest in cryptocurrencies. And then the fifth step in the cryptocurrency process is to purchase that cryptocurrency in the name of the solo 401k plan, which is going to entail opening up an account with cryptocurrency exchange in the name of the solo 401k plan. Many of our clients will use Gemini, and we have an actual guide that we can provide to clients that walk them through the process of opening up the solo 401k account at the exchange in the name of the solo 401k plan. And they're able to link a crypto exchange account in the name of the solo 401k plan with the solo 401k bank account, and then the funds flow from the solo 401k bank account to that cryptocurrency account, also in the name of the solo 401k plan. All right, so this just further breaks down the steps for investing in cryptocurrency through a solo 401k plan. I know that slide's a little tough to see, but you know, zoom in on it a little bit. Let's just briefly go over these steps. Again, we just covered them up above, but again, you have to qualify for a solo 401k. That's number one. So in order to qualify, you have to be self-employed with no full-time W-2 employees in any business that you own. And we're talking about non-owner employees. So if you're an S corporation, obviously you're an employee and you get a W-2, but you're an owner employee, so you qualify. And then the second step is to adopt the solo 401k plan. When you open a solo 401k plan with a company like my solo 401k financial, you complete our online application, you draft the plan documents that allow for investing in alternative investments, including cryptocurrency. We then help you open up a bank account for the solo 401k plan. And that can be done at your bank of choice, whether it's a local bank or a credit union or an online bank. And then the next step is to fund that solo 401k bank account. That can be done by transferring IRAs, making contributions, or transferring former employer plans to the account. And then the final step is to purchase that cryptocurrency, where there's a cryptocurrency account open up at the exchange in the name of the solo 401k plan. And many of our clients use Gemini, and we have a guide for that, as I mentioned earlier, that we can provide on how to open up an actual crypto exchange account in Gemini in the name of the solo 401k. And then the solo 401k bank account gets linked with that cryptocurrency exchange account, and now you can start investing in cryptocurrencies. Here are some tidbits about investing in cryptocurrency with your solo 401k. You're always going to use the EIN number for the solo 401k when opening up that account at the exchange in the name of the plan. So the cryptocurrency account is opened up in the name of the solo 401k plan. You can store the cryptocurrency in a separate physical wallet. You do not want to combine any of your personal assets or personal funds with that cryptocurrency wallet or with that cryptocurrency account. All right, let's transition to the Roth Solo 401k. So the Solo 401k allows for both employee Roth Solo 401k contributions as well as employer Roth Solo 401k contributions. The limit for 2025 contribution for Roth Solo 401k is $23,500 at the employee level. You also have that catch-up contribution at the employee level of $7,500 for those who are age 50 or older. There's also, in addition, well, I should say, a new catch-up called the Super Catch-up, $11,250, which is only available for those who are age 60, 61, 62, or 63 here in 2025. So instead of contributing the $7,500 catch-up for those who are that age, those ages there, you can instead contribute $11,250. Obviously, you cannot contribute both. And then if you're over age 63, so if you're 64 or older, then you could do the $7,500 catch-up. The Solo 401k allows for the employer Roth Solo 401k contribution as well. That's 25% of your W-2 wages if your business is taxed as an S corp. If your business is taxed as a sole proprietorship or a partnership, then it would be a 2% contribution as an employer Roth Solo 401k. And again, the employer Roth Solo 401k contribution became available in 2025 the Security 2.0 Act. You're not required to make employer Roth Solo 401k contributions or even employees Roth Solo 401k contributions. You can instead just make voluntary after-tax contributions up to the overall limit, or you can do a combination of these contributions. Another good item to bring up here is that contributions to the Roth Solo 401k, whether employee Roth Solo 401k contributions or employer Roth Solo 401k contributions, are not restricted by your income limit. In other words, it's not like a Roth IRA where if you make over a certain amount in wages, you cannot contribute to the Roth IRA. That's not true with the Roth Solo 401k. However, you obviously need to have the necessary net self-employment income to justify the amount contributed. So you can't contribute more than you make to the solo 401k. Let's talk about the Roth Solo 401k distributions now. We just talked about contributions. As mentioned earlier, we do get clients that like to determine whether or not they want to start making distributions from the Roth Solo 401k. So naturally, they're interested regarding what the rules are when taking a distribution of a Roth Solo 401k plan. So there are two basic types of distributions from a Roth Solo 401k plan. One is a qualified distribution, the other is a non-qualified distribution. And that deals with whether or not you have to pay taxes on any of those amounts distributed from the Roth Solo 401k. So that's where the whole qualified versus non-qualified distribution comes into the picture. So in order for it to be a qualified distribution, which means it's going to be tax-free, which means that both the basis and the earnings will be tax-free, you have to meet certain rules. The first rule is you have to be age 59 and a half or older. And the second rule is that you have to have had the Roth Solo 401k plan for at least 5 years. So there might be an instance where you might already be age 59 and a half and you open a Roth Solo 401k, let's say at age 62, you open it for the first time. So obviously you meet that first rule, that 59 and a half, but you don't meet that 5-year rule. So if you open a solo 401k for the first time and you're age 62, for instance, and you make a Roth Solo 401k that year, you're going to have to wait 5 years before you can make a qualified distribution, which would result in being able to distribute the bases and the gains tax-free. So what's the qualified distribution means? It means that you can distribute all the funds or any of the funds from the Roth Solo 401k tax-free and penalty-free because you both are age 57 and a half and have had the Roth Solo 401k for at least 5 years. Now let's talk about a non-qualified distribution. That's a non-qualified Roth Solo 401k distribution. Under that type of scenario, you have to be age 59 and a half before you can even distribute funds from the Roth Solo 401k plan. So if you are age 59 and a half, you will qualify to make a non-qualified Roth distribution, resulting in having to distribute some of the basis and some of the earnings from the Roth Solo 401k plan. That portion attributed to the basis will not be taxable, but the earnings will be taxable, meaning federal taxes will apply. And depending on your state of residence, state taxes will also apply. However, the 10% early distribution penalty will not apply because you are age 59 and a half. So those are some items to consider when looking into making distributions from your Roth Solo 401k plan. You want to determine whether it's a qualified distribution versus a non-qualified distribution. You need to make sure that you meet those distribution requirements that we just touched on. Now let's switch over to the $1,500 auto contribution credit. So this credit here is available for new plans that are adopted here in 2025, which means that you would qualify for an auto contribution credit starting in 2025. It's also available to existing clients, and many clients we've already added that feature to your plan. But it may need to be added to anyone that has a solo 401k plan with us prior to December of 2023. So you would need to let us know so that we can add that auto contribution credit to your plan. And take a look at this link here I sent to a website that goes over the auto contribution credit in more detail. It also covers the tax credit. Take a look at that. Now, the $1,500 auto contribution credit is a dollar for dollar credit, and it's equal to $500 per year for a maximum of $1,500 over 3 years. So that means that if we update your plan this year in 2025, this would be the first year you qualify for that auto contribution credit in the amount of $500. You would then qualify for another $500 in 2026 and a final $500 in 2027. So it's over 3 years for a total of $1,500. And you have to have a solo 401k plan that allows for the auto contribution credit. For example, solo 401k plans offered by traditional financial institutions such as Chase, Wells Fargo, Charles Schwab, Fidelity, Merrill Lynch, to even Census, even some of our competitors, they may not have that auto contribution credit available, but our plan does offer it. We're actually the first in the industry to offer it, as a matter of fact. And again, it's a dollar for dollar credit, which means it reduces your business taxable income dollar for dollar. Once the auto contribution credit is added to the plan, you can opt out of making contributions. In other words, you don't have to contribute to the solo 401k plan in order to still qualify for that auto contribution credit. So take advantage while you can. And then if you do want to make contributions, you can do so in whatever amount you want to do it, as long as it's within the solo 401k contribution limits. So you're not required to contribute, in short, in order to qualify for the auto contributions to a 401k credit. You just have to have time to apply. And you claim that $500 yearly auto contribution credit by filing the Form 8881 each year. So if you if you open a solo 401k plan with us here in 2025, you would file the Form 8881 next year when you file your business taxes, doing the $500 credit for the first time in 2025. And again, it's up to 3 years in $500 increments. And you can learn more about the auto contribution credit by looking at that code section 45T, as well as notice 2020-68. So here's more information about the auto contribution credits. Here's an illustration. So if you sign up for a solo 401k plan with us here in 2025, this would be the first year that you would qualify for that $500 auto contribution credit. And then you would qualify for another $500 in 2026 and a final $500 in 2027. You can convert an existing solo 401k plan over to our plan and qualify for this auto contribution solo 401k credit. So if you have a solo 401k plan at Fidelity, you can restate that plan to our plan here in 2025, and we would include that auto contribution credit in your new plan. So then you would qualify for the auto contribution credit for 2025, 2026, and 2027. So some of the features about our plan that we offer is that we charge a flat annual fee of $125. And that will cover not only the plan updates as required by the government, but it will also cover compliance support such as preparing and filing Form 1099-R as well as Form 5500 Easy. You would let us know once you need the Form 1099-R or the Form 5500 Easy, and we would prepare those tax documents on your behalf and file them with the government. We also assist new clients open up their open accounts over at Fidelity or Schwab, or they can open in your local bank. Those are the holding accounts to hold the solo 401k funds. One of the great things about our plan and services is that we take care of these type of compliance matters and plan updates without having access to your funds. So it's important that you communicate with us. And also clients like this type of arrangement because they can choose when to hold the funds at, and we never have access to our clients' funds. That's by design. And then, as I mentioned already, our solo 401k plan allows for that $1,500 auto contribution credit. Uh, Keep in mind that when you open a solo 401k plan, you need to separately track each source of funds. So if we're talking about a one participant plan, it would be three separate holding accounts, that is, bank or brokerage accounts, to hold your pre-tax, Roth, and voluntary after-tax funds. So each account to hold your separate sources of funds. If you have two participants in the plan, such as both spouses are contributing to the plan or transferring funds to the plan, that would be a total of six holding accounts. So three for each participant. So different sources, pre-tax, Roth, and voluntary after-tax for each participant for a total of six holding accounts. Okay, that takes care of going over the slides here. So I appreciate you joining today. It looks like we don't have any questions today, but we'll have another one of these daily webinars today at 1 p.m. Pacific time, and I'll be back here again tomorrow at 10 a.m. Pacific time. Until then, have a good rest of the day.